Thank you, listeners, for joining us today on Ask the Expert. My name is Nathan McDonald of Sprott Money News, and we are very excited to have the pleasure of speaking with Jim Sinclair this morning. Jim Sinclair is the CEO of Tanzania Royalty Exploration, which is ticker symbol TNX in Canada and TRX in the United States. Being a precious metals specialist and a commodities and foreign currency trader, Jim has authored numerous magazine articles and 3 books dealing with precious metals, trading strategies, and geopolitical events, and their relationship to world economics and the markets. In January 2003, he launched jsmindset.com, which now hosts his gold commentary, is intended as a free service to the gold community. With this, I am pleased to welcome Jim Sinclair this morning. Hello, Jim.
Oh, thank you.
Excellent. So we have a few questions here today from our viewers that they're interested in, and there's definitely a few questions considering everything that's happening in the gold market today. It's interesting to say the least. So I'll start off with a quick question, which I'm sure you've gotten before, but it's still important to new viewers and those who, are new to the gold market, and that is, for the first-time investor, what is the best way to own gold in your personal opinion?
I'd say for the first-time investor, modest capitalization, 1-ounce gold coins, or a fund representing physical gold.
So it's physical gold would be your first bet, though?
The first would be physical gold, but there are many ways of buying physical gold. Physical gold is represented, again, as I said, by funds such as Fizz, which holds the precious metals itself. It's represented by mining companies that have low costs and controlled overhead. It's represented clearly by the physical metal itself. So according to the character of the investor, either of those 3 methods would fulfill their requirements. The right way to look at gold is to look at it as a method of savings. Fiat currency is for transactions, gold is for savings. Throughout all history, in the last 2,500 years specifically, gold has held its value where currencies have risen and fallen on a continuing basis. So for the modest capitalized, first-time investor, look at gold as a savings account that will not be bailed in and clearly will not need a bailout. Don't watch the volatility that's in the marketplace, which is only going to increase, not decrease. And bear in mind the volatility is going to be on the upside as well as you've seen it in this reaction. So physical gold can be purchased in various different ways and means, but physical gold is the first step.
Excellent. Yeah, I agree, definitely. You definitely should have a first, your position in physical gold before you branch out. And then, obviously, like you said, there is a lot of other great options out there. So
there are great options, but there also are ways and means to own physical gold. And what we can't do is change an investor's characteristics. If an investor has never invested in physical gold, then the investor should take a look at the other physical gold equivalents, such as managed funds in precious metals and funds that simply buy and own precious metals according to their capitalization. That would be the second best way. And the third best way is companies, again, gold to mine, that they have control over their capitalization. They don't issue paper and issue wallpaper on a continuing basis. That are managements which control their spending. So whatever the investor is, an equity investor, a fund investor, or a person looking to put their savings into physical metal in their own physical possession, physical is the first door of entry for any investor considering gold.
Great. Thanks for that detailed answer, Jim. That's great. So the next question that we received was, if the stock market crashed tomorrow, which of these 2 scenarios do you see unfolding? A, the gold price drops as people get margin calls and sell the kitchen sink, including gold to cover these margin calls. Or B, the gold price goes up as a flight to safety and hyperinflation concerns set in as the Fed prints more and more money to keep the stock market propped up. What do you see more likely?
Well, the answer to that is in terms of series and time, over a short-term period, you will get A and then get B. And everybody sells, they sell everything. When the naughty house is raided, the piano player goes to jail. When the market goes down and creates margin calls for people, needs for liquidity, or just a general feeling of malaise, you'll find gold going lower. What will determine the direction of gold is not the stock market. What will determine the direction of gold is the direction of the U.S. dollar, the direction of the reserve currency now only by default. As the economy worsens, as it will, as we go into collapse number 2 in the United States and in the Western financial world, the U.S. dollar will not have rationale for appreciation economically. And the effective economics, which is practiced now, that is the psychological adjustment of people's thinking as being a primary factor in economics, would have you believe that through MSM, which is your mainstream media, that Europe is in much worse economic situation than the United States. Well, first thing you've got to remember is the United States is a monetary union, and this monetary union is the U.S. dollar. And if you were to examine the income statements and the accumulated deficits of the various members of the dollar monetary union, the states of the United States, you'd find states that are as bad and, in fact, worse than Italy and Greece. The U.S. dollar will decline significantly, and that significant decline, which I should suspect will be fully recognized before the July month is out, will be the price-determining factor fundamentally that will deliver to you a new high in gold above 1900.
So you see MOPE losing its effect over time, or very shortly, actually.
You would find that in the beginning, look right out your window now. Gold is going down, the stock market's going down, and the malaise is setting in. When the world sells dollar-denominated assets, they buy the dollar. I mean, that's exactly what happens. If you were to sell Apple Computer and you were in Istanbul or Budapest, well, you're going to end up with dollars. So the first thing is it creates a demand for dollars followed by a very significant supply of dollars, because the bottom line, you don't want the dollar. You're coming back to your own currency. So the dollar will first firm, followed by a very significant fall as U.S. assets become key items to be liquidated. And the same problem that is developing now in Japan is developing in the U.S. Those who Bernanke, our chairman of the board of the Federal Reserve, rescued are testing him to see whether or not his intentions in QE are significant. So what they're doing is selling treasury bonds. Selling treasury bonds is a definition of rising interest rates. Interest rates are not created by a group of wizards sitting at a table with pointy hats on. Interest rates are a product of the position of federal paper in the treasury market. Bernanke is being challenged by the IMF and by the same brokers and banks that he rescued to see what resolve he has. We're going to find out very soon whether or not he will stand up to this or whether or not Mr. Bernanke will leave office with history looking towards his administration of financial matters as total failure. He has that decision to make as we speak. Let's see what he does.
And he doesn't seem to have too much time.
Well, he doesn't, because he leaves office at the beginning of the new year.
That's correct. So with all this going on, do you believe that China is accumulating gold in order to eventually back the yuan and start a new gold standard?
No, I don't believe that any gold will back any currency ever again. I don't believe that there'll be any convertibility ever in the history of currencies. When you say currency is backed by gold, what you're saying is that it's going to be convertible again. The answer is no, it's not. But gold is emancipating itself from paper gold. The key to how paper gold, the means of manipulation, is the condition of the warehouses of the COMEX and other future exchanges. Because if the warehouses are wiped out by physical demand, which they're in the process of being, then the futures exchange can no longer settle in gold, therefore it loses its ability to manipulate gold. So what you're watching is an action in this decline of a bull market in physical demand for gold, while you have a bear market in paper gold. That is an emancipation process. And should it be successful, that means taking the level of inventory of the COMEX down to a point where the COMEX is forced to change, as they did in 1980 in the Hunt crisis, the means of settling gold, then the manipulators of gold are out of business. And the price-determining mechanism for gold will return to the over-the-counter cash market for gold, which exists and remains and is healthy. And the price of gold will rise to levels even above what I predicted.
Yeah, I've often heard you say that the price rise will set your hair on fire.
Literally and figuratively and correctly.
That's great. Well, hopefully that day is coming soon, especially with all the...
Just watch it. All the listeners have to do is watch the inventory of gold at the COMEX. And remember in 1980, because I advised the Hunts in the means of getting out of their position, that when the COMEX bought their own rumor that the Hunts intended to take delivery, which they never did, they went to sellers only. They went to cash settlement on gold. Few know that because they canceled the cash settlement on gold back to regular settlement the minute the market started to break. So it was only in a place for about 5 days. But knowing that, you know exactly what the same people, a lot older, which the same people are going to do. They're not going to see their warehouse wiped out of gold. They've got to stop settling in gold. They're near wipeout point right now. They could stop settling in gold as early as July.
Wow, that's really soon.
Then gold is emancipated, and if the government wishes to make the situation look better, they have only one option, and that is to sell physical gold. And the question is, how much physical gold do they really have that is unencumbered, that hasn't been leased, that really exists, and in fact can be sold into the marketplace? The answer is, the emancipation of gold is the beginning of the real gold bull market that has not even happened yet.
Yeah, and it appears that the inventory at the COMEX is depleting rapidly.
It's falling like a fishing line hanging off a fishing pole.
That's going to be great for the price of gold in the up direction.
The entire key to gold finding its price is that the mechanism of price determination is not paper, fraudulent paper that has no gold behind it whatsoever, but real gold itself. As gold is emancipated by the change of delivery mechanism of the exchanges, which must happen, gold so far above 1900 is to make that number highly immaterial.
That's great. So recently there's been a lot of manipulation in the system. I counted
because this is happening. The manipulators is knowledgeable parties who know that what I'm telling you is exactly correct and are doing everything within their power to prevent it. But by mistake, they've created fire sale on gold because the demand for physical in the developing world and in Europe and here in the United States is up by tenfold and tenfold on that.
The paper price is down, but the physical sales and purchases
are through the market in volume of demand for physical gold, while the Fed and the gold banks have created a bear phase in gold through the manipulation of paper. Paper defaults because the default of an exchange is a change delivery. They're never going to say no. They're never going to fail on a delivery. They're going to change the method of delivery to 100,000 shares of GLD or paper cash, not physical gold. They can't. They're running out. They have to. There's no question. You don't have to be a brain surgeon. Pure logic.
That's right. So
and bear in mind, I and my wife were members of the COMEX exchange. I know how these jerks think.
Yeah, that's right. You have a lot of experience in that industry.
I have over 50 years in this industry.
That's right. So clients' funds have been stolen at MF Global. Citizens' bank accounts have been raided in Cyprus. Now Western central banks around the world have begun to implement bail-in plans, which is something you've been talking about quite a bit recently. Have the rules of finance been changed?
I'm trying to save your listeners from being bailed in. 1 in 1,000 listens to me.
Yeah, it's a hard message to get out.
I'm making meetings all over the world. Traveling is no fun, okay? I'm not 25 years old, I'm 72. And I'm doing everything within my power to wake up a sleeping public that I think is going to sleep right through bail-in and find out that, like in Cyprus, 83% of accounts above the insurance level were in one way or another blocked and remain blocked.
That's right.
83%, not 35, 83.
That's a staggering number.
Well, it means you have nothing. I mean, why in the world have a sick joke and give somebody back 17%? Why not just take it all?
It's basically an insult.
It's an insult. And the IMF has now taken a position contrary to the Fed, who wants lower rates to remain low. The IMF wants everybody to give up.
Do you believe everybody will give up?
Is it politically possible to entertain 25% unemployment in the United States without riots in the streets? Not going to happen.
Yeah, it's not going to happen. That's right.
When Bernanke turns over the helm of the Fed to Ms. Yellen or some similar person, it will be simply to get more helicopters into the air.
That's a scary thought.
The scarier thought is going into the dark ages tomorrow.
That's right.
What would happen if QE stops? Rates of 14% on 10-year money? No problem at all. It happened back in the 1970s, so why can't it happen now?
That's right. Everybody lives in today, and they think that happened in the past. It won't happen again.
They're all living in a virtualized, financialized world, which is a world of make-believe. And make-believe is about to become reality. Virtual markets and financialized economies are collapsing.
And everything's a virtual economy, like you said.
Virtual economy and financialized economy are collapsing. And it will be absolutely public that this has happened as we go into August and September.
So do you think, because they're implementing all these bail-in plans, do you think if the banksters foresee another 2008-style collapse, which you see coming?
The second collapse of the millennium has already started.
It's already started.
It will become quite public by the fall.
So do you think precious metals will be safe from confiscation in this scenario?
Confiscation occurred in the 1930s, and this is something the listeners must understand. The reason why Roosevelt confiscated gold was because that was the exchange standard. In order for Roosevelt to create more paper and buy his own debt, then, dissimilar from now, you had to have the gold, and every day he met with his Secretary of the Treasury at breakfast, and they raised the price of gold. So he did it to take the U.S. out of the speculative arena, and then back then there was no China. The U.S. was the biggest speculators in the world, so it shut down speculation. That's the only reason. Second was he had to have the gold because without it he couldn't expand the monetary base. There is no fundamental reason today to support the thought of confiscation, unless you say they will punish us for saving ourselves, which is a little bit paranoid.
It's very paranoid. One thing that I've noticed is that in Western society, I don't believe it would even be worth their time to do a mass confiscation, considering that so few people seem to even own gold.
It's almost like taking guns from people in Georgia and Texas. It's a very hard proposition. And it was a hard proposition back then. They collected very, very little gold. Very few turned the gold in.
That's right. That's what a lot of people forget, that they put out the bill and they told people to return it in. Yeah. But it didn't actually, a lot of people just didn't do it.
People totally ignored it. History speaks to that fact compared to the amount of gold that's out there.
That's right. So something you often talk about is people taking control of their own destiny. This includes taking ownership of your own shares. Do you believe that in today's uncertain times we all need to become our own central bank?
Well, that's something that I've held up as a primary necessity going back over 10 years, to be your own central bank. And there are various methods of owning shares. It's not any great kind of difficulty. There is direct registration, there's DTCC, there's certification. So the amount of listeners that are in the DTCC system, right as we speak here, even pro-gold, is probably somewhere around 90 to 95%. DTCC is a tool of manipulation. DTCC is the father and mother of naked short selling. DTCC is the power tool of the banking community. I've recommended to the people who listen to me that they take their shares into direct registration, which can be done even in retirement accounts, even in Canada, as well as the United States, as well as Europe, Euroland, and anywhere else. It is your right. You demand it. If they won't do it, you go to a broker who will do it. The total cost is $50 per issue, not the $500 they quote. $50 per issue to go into direct registration. Direct registration results in a bookkeeping entity known as the transfer agent having your name, not your share, not the ownership of your share, your name. That is a step out of the system. When you're in DRS, direct registration, you need two things to have certification. One, you need the company that you own to okay it, meaning that they participate in it. And number two, you simply got to ask for it. And there is no charge when you're in direct registration for your actual certificate, which is the ultimate step out of the system. This system is coming down. The huge crash is the second collapse of the Western financial world, which has already started, but will be clearly seen, understood, and accepted to be real in 2013. Now, you don't have much time. You can't sit around and say, well, do I believe Sinclair? Do I really want to protect myself? I am absolutely correct. And all you need to do is to look at the Canadian budget report that was filed with your agencies, and right in there it discusses bail-in on Canadian citizens. If that isn't enough for you, then all you need to go back is to the joint report, which was done by the Bank of England and the Federal Deposit Insurance Corporation of the United States, discussing bail-in as the absolute method to be used from this point forward. So you're sitting around thinking about it. You're in harm's way. Get off your back end. Get up. Get your direct registration, which is your right. Get your certificate if you want, and get any money out of banks that you have that is over the amount insured. And don't believe you can have 50 banks and play some cute game and get insured in all of them. Governments will never let you get away with that one.
So basically, take control of yourself.
Take control of yourself. Physical gold is for savings. Fiat currency is for spending. I think the prices you're going to see on gold stocks and gold going into early July, you will never in your life see again in terms of being cheap.
It certainly appears to be setting up that way.
Well, it is setting up that way, and it will happen.
That's great news.
I haven't been in this business for 50 years and just wasted my time. I know these markets. I am these markets.
You earned the nickname Mr. Gold.
Well, maybe I qualify by age.
There you go. So your father, Bert, and his business partner, Jesse Livermore, are known as legendary investors who used to control a staggering 10% of the daily New York Stock Exchange trading volume in the 1950s. It
was like watching Michelangelo paint to watch Bert trade, but all I know of Jesse is what Bert told me.
That's right. But they're both legendary investors in their time, that's for sure.
They are the two great lone wolves of the investment market. I got my sense from markets from Bert and indirectly, therefore, from Jesse. And I worked for Harry Schultz for about 11 years. So I'll say my fundamental understanding comes from the Dean of Gold. God bless him, along with Harry Schultz.
There you go. That's great.
He's 90.
Yeah, he's still putting out great information. And
he's brilliant. Totally, completely, utterly, and absolutely brilliant.
He is, I agree. And I don't know anyone that would disagree with that statement.
I'm going to tell you, he was one of my mentors.
That's great. So what would the reaction be to the recent attacks on the gold and silver markets?
Well, the reaction has been it started a bull market in the physical gold by mistake. And we've discovered that there isn't any physical gold in comparison to what we might have thought existed above ground before. And the question it begs is, where did all the physical gold go? And my opinion is the entities which control the gold banks, the entities which are our government financial planners, own the gold. I think it's been taking place, and that's why I think the physical price of gold could rise as high as $50,000, based on emancipation from paper gold, based on the continued decline of the inventories of the exchanges.
Well, so basically this is a beach balloon that's been pushed underwater so far that it's going to just rocket higher. You take
COMEX inventory down to a level that they really know they got to change. They must change because they don't have the gold to deliver it. It's just simple. It's arithmetic. They haven't got it. They have to change their delivery system. Then paper gold will trade at a price that's irrelevant to the real gold market, physical gold.
And paper gold seems to be becoming increasingly more irrelevant.
Well, it's relevant enough that it's scared the living bejesus out. It scared the living dickens out of a lot of people that are listening on this telephone call now. But physical gold is taking its senior position. Paper gold is taking a junior position. The moment the exchanges change to a cash settlement, the new bull market on gold will be born. I don't think we've seen the bull market on gold yet.
So you think the real gains are just to come?
I think the real gains are just to come, and I think it's going to start in July. I think that we're going to have a second Western financial crash, and all of these advisors that are talking about biting the bullet and going to austerity will be creating paper so fast you won't believe it.
Wow, that's great. So, do you see that this price rise do you think it's scaring the COMEX, or do you think?
I think the COMEX is terrified. Look at the price of COMEX seats. They've gone in 205. They're 500,000. Today they're under 100,000. Is that not telling you something?
It's telling me something, that's for sure.
Yeah, it's telling your listeners something, because this is not brain surgery. This is not complicated stuff. This is mathematics. Do the math. Stop with all the talk. They don't have the gold. And if an exchange can't deliver the gold, no matter what they call their contract, it's not gold. End of the ability to influence the physical market. The over-the-counter physical market's still there, except you got cobwebs on the telephones. It's discoverable on platforms, except there's not enough people making a demand for that platform that anybody has any interest. The price of gold, when it's traded on the over-the-counter exchange where it was traded before 1973, will be back again, and will be as easy to find as it is for you to find December gold contract now.
That's right. So, finally, Jim, where do you see the price of gold and silver by the end of this year? Also, where do you see the price of gold and silver in 10 years' time?
Well, the price of gold and silver by the end of this year will be in excess of 1,650 and could be challenging the 1,900. The long-term prognosis on gold, assuming that the paper gold remains deliverable, is 3,500. If paper gold no longer can deliver real gold and the physical gold market takes over, I'm a $50,000 per ounce person.
You see $50,000 per ounce?
1,650, 1,900, 3,500, 50,000.
And it technically could go to infinity if the fiat system collapses.
Gold is for your savings. Fiat currency is for your transactions. Gold will be in the system emancipated, and the countries like Russia and China, who have a lot, their currencies will wear a necklace of gold. Because they have that gold, their currencies will be more in demand, and the countries that don't have the gold or won't audit it publicly will be less in demand. The future of the yuan, therefore, is greater than the future of the U.S. dollar.
And you see the U.S. Fiat currency basically drift into irrelevance?
No, I wouldn't say irrelevant, but I'd say 56 on the USDX is not out of the question.
That's a big change, exactly. So, Jim, you're doing quite a few speaking engagements recently, and I think you have a few more upcoming. Can you?
I've been having private meetings, no recordings, no names, where people can ask me any question they want to ask me, and I'll give them an answer. And I've been to London. I've been to Toronto. I'm going to Vancouver soon. I'll be in Chicago. And I'll be in Phoenix on the week of July 8th, and I think it's very good timing, because I think right after those meetings, everything is going to become extraordinarily obvious to people.
You definitely have a track record of speaking at such as the GATA event in London, and then the price exploding.
Right, okay. But, I'm not giving this as a trading advice. I'm giving this as investment advice. Why would I give trading advice? I'm a trader. I do it for myself. All you do is create walls in front of you. So all the advice I've given to investors, and I'm giving now, deals with the investor. The trader, I'm not interested in, because today's virtual world, I don't want any part of it.
That's right, and neither do I. But thank you very much, Jim, for joining us today on behalf of Sprott Money.
Well,
it was great.
I enjoyed it. I hope you'll find it interesting enough, and I hope when all this turns out correct, you'll have me back.
And we definitely will if you will join us. And our viewers will definitely find this very informative. And the price predictions that you gave should put a smile on many people's faces.
Well, when they come in the marketplace, they will, and they will come in the marketplace.
Great, Jim. Thanks for joining us, sir.
It's my pleasure.